Pump or dump? That is the big question every trader and investor is asking right now about for coin, a digital asset that has started to gather serious attention on exchanges like Binomo, community forums, and social media groups, where excitement, speculation, and controversy all collide to create a highly volatile environment that can either deliver massive profits or crushing losses, depending on timing, strategy, and understanding of market cycles. To really grasp whether Forcoin is primed for a pump or doomed to dump, we need to break down its fundamentals, technical analysis, tokenomics, investor psychology, adoption potential, and the overall macro environment for cryptocurrencies in 2025. Because in truth, no single factor alone decides the fate of a coin. It is always the interplay of multiple forces, from whale behavior to retail sentiment, from liquidity depth to exchange listings, from narratives pushed by influencers to real-world utility. And Forcoin stands at the crossroads of these dynamics, trying to prove whether it is a serious long-term project or just another speculative hype token waiting to implode once the initial wave of FOMO fades away. First, let's talk about why people believe Forcoin could pump. Supporters argue that Forcoin's unique branding and limited supply design make it psychologically appealing in a market where scarcity and meme-driven narratives often ducker prices to irrational highs, similar to what we've seen with Dogecoin, Shiba Inu, and more recently with tokens that exploded simply because of viral momentum. And if Forcoin can ride that same wave, especially with the right mix of ticked virality, Twitter crypto influencer endorsements, and sudden spikes in trading volume on Binomo, then a short-term pump is not only possible but almost predictable, as speculative traders rush to grab a piece of the action before it's too late. Another bullish point is the growing chatter that Forcoin might secure additional listings beyond Binomo, and every time a coin jumps from a mid-tier exchange to a top-tier one, history shows that demand surges, liquidity improves, and prices often rally, creating a feedback loop of hype and more buyers. And given the way the market currently rewards the next big thing, we cannot underestimate the potential of a sudden and dramatic breakout for Forcoin, especially if Bitcoin and Ethereum continue to maintain bullish momentum into late 2025, since altcoins almost always follow the leader when the crypto tide rises. However, turning to the bearish side, the dump scenario, skeptics warn that Forcoin has all the classic signs of a pump and dump trap: thin liquidity, heavy reliance on hype rather than solid fundamentals, and a community base that seems more driven by speculation than by belief in real-world utility or long-term technological innovation. And if whales or early investors control a large percentage of the circulating supply, then the danger is clear. Once retail investors push the price high enough, those big holders could dump their tokens on the market, triggering a cascade of panic selling, collapsing the price, and leaving late buyers holding worthless bags. Something we have seen play out countless times in the history of crypto, with tokens that were once hyped as the future but quickly vanished into obscurity once the exit liquidity dried up. Further, analysts point out that Forcoin's roadmap is still vague and its team remains largely anonymous, raising concerns about transparency, accountability, and trustworthiness. And in an industry plagued by rug pulls and scams, that lack of visibility can be a red flag that investors ignore at their own risk, because the number one rule in crypto is do your own research. And unfortunately, with Forcoin, reliable research materials are scarce, leaving people to rely mostly on rumor, speculation, and the momentum of the market rather than hard facts or detailed development plans, which dramatically increases volatility and the likelihood of manipulation. So where does that leave us? Is Forcoin a pump or a dump? The answer, uncomfortable as it may be, is that it could be both, depending on the time frame, strategy, and perspective of the investor. Because in the short term the coin may indeed pump, driven by hype cycles, influencer attention, FOMO-driven buying, and exchange listings. But in the long term, without strong fundamentals, sustainable utility, or a trustworthy development team, it risks eventually becoming a dump as the hype fades and capital moves elsewhere. Which means that traders should approach Forcoin with extreme caution, treating it more as a speculative gamble than a safe investment, and always using risk management tools like stop-loss orders, position sizing, and profit-taking strategies to avoid being caught on the wrong side of a sudden price swing. The broader lesson here is that Coin reflects the dual nature of the crypto market itself: wild opportunity on one hand, devastating risk on the other, a game where fortunes can be made and lost overnight. And the deciding factor is not luck but preparation, discipline, and awareness of market psychology. If you are a short-term momentum trader, Coin might be the kind of asset you can ride during its explosive rallies, but you must never fall in love with it or hold blindly, because loyalty has no reward in speculative markets. The only thing that matters is timing your entry and exit. While if you are a long-term investor seeking stability and proven growth, then Coin is probably not the safest bet until it shows more credibility in development, governance, and partnerships. And even then, it would be wise to diversify rather than go all in, because no matter how shiny a coin looks in the spotlight, the graveyard of crypto is littered with the names of once hyped tokens that promised the moon but ended up as nothing more than cautionary tales. In conclusion, the ultimate truth is that Coin is both a pump and a dump, a coin that embodies the speculative heart of crypto itself, with the potential for breathtaking gains if you catch the wave at the right time, but also the lurking danger of catastrophic losses if you chase it blindly without discipline, research, and strategy. And the wisest approach is to treat it like walking a tightrope: thrilling, rewarding if successful, but always one misstep away from disaster. So respect the volatility, manage your risk, and remember that in the world of Coin and other high-risk cryptos, the only guarantee is uncertainty, and only those who prepare for both pump and dump scenarios will survive to trade another day.